Hello, everyone. Hope you had a nice long green trading week and a wonderful weekend. Let's go ahead and just dive into things. First off, there was a large news event that occurred over in Saudi Arabia. A lot of tension. Oil facility, one of the biggest in the world, is basically impacted, and oil is set to basically gap up in a dramatic fashion to the upside. So hopefully, nobody is short oil at this time. That held over the weekend because basically, rest in peace your account. Hopefully, you are, I don't really know what to say. If you went short over the weekend, that's basically the risk of holding a position over the weekend. That's why I say it's always best, and I always tell my members this. You never know what's going to happen. It's always best to have full control over your money, and having plays open over the weekend. Again, it's very risky. Sometimes it works out tremendously in your favor, and other times, well, like a lot of people are going to learn today, that your accounts are susceptible to risks that you cannot manage. That all being said, let's just go ahead and continue here. Dollar, we have the Fed minutes coming up this week, I believe, and we're looking for the cut, et cetera, et cetera. I'm looking at the dollar basically retesting that 97.80 support level here, and then from there looking at a further push to the downside, 97.32. 9730-ish area, and then basically looking for some chop at this level, probably retest that zone as well, and then longer term start looking for a move back down into around that 90 so 95.78 level. We do have a gap that does need to be filled down there, so again we are starting to, I believe, start pushing down here, and we'll see a nice continuation move to the downside over time. Near term, again, 97.80, an earlier part in the week, probably going to see a move up into around was that 98.40 possible again, and then we'll see that rejection level. Assuming that we do get the rejection there, we should get a push below that 97.80 support level, and then start rushing down into the around 97.36 to as low as the 97 level outright. So that's the 2 or 3 levels that I'm watching here. 98.40 the upside. Again, you can see that we are starting to put in lower highs, lower lows this past week as well, with a lower weekly close for the second consecutive week. The big key here is if we break 97, 83, 84-ish, and then we'll start looking for further push down to 97.30s, retest that 97.80 level, and then start pushing right back down into what looks to be around 97 or so near term. So we'll see how that all comes into play. Seems like I'm rushing a little bit. It's because I am. I want to get this video out for everybody before the open, or not long after the open of the overnight session to start off the trading week. As far as gold is concerned, we did have a very choppy week last week. We ended up pushing down into the lower level here. Like I said, that's the level that we're looking for, is the down lowest part of this big week. Let me just kind of rephrase everything there. It's just mumbling like an idiot. Looking at the test of the lower end of this wick of this candle, and that's basically what we ended up seeing here. I expect to see gold, it did have a little choppy week here, and I do believe we are going to confirm the low here and then start looking another push back up into around the 1570 level. So we're basically looking at 1570, 1517, 1517 to about 1520, and then looking for another pullback here to around 1510 or so, and then I believe we could start looking at potential further upside again up into this 1540s. But again, we'll see what happens. There's a lot of news happening this week. You have the Fed, and then you have this obviously the situation with Saudi Arabia, and then who set off the whole chain reaction of events over there. So that will become somewhat clear, I guess. Never going to get a straight answer from any of them, but that's my own personal opinion. So I'll just leave it there so they don't shut down my channel. Uh, anyway, so again, I believe the lows will hold here. If they fail to hold, I'd be surprised. We'd be looking for, again, 1480 at that point in time to another lower area around 1468. But again, I don't really see that happening, but those are the levels worth mentioning at this time. I do think that we get back up into 1517 to around 1520, a near-term high, with potential further extension back up into the 1540s. So that all being said, let's continue on forward, not to kill a lot of time here. Let's go ahead and just jump into crude. Everybody's been asking me about that, so I figured I would just go ahead and get to that sooner than later. So let's look at our weekly time frame view. Easiest way to see this action here. Simplifies a lot for everybody. And I'll just go ahead and say it. I just made a post for my YouTube subscribers, all of you, under the discussion area, and you probably see the post out there. I'm looking at oil probably starting off the week around 64ish, which is around that 61.8 fib level, with a potential peak at around 65.50, close to 66 possible, and then be looking for the gap fill, which it'll be a big one. And then obviously as we head out in time, we'll be pushing back into those 47s. Now, when I say out in time, I'm talking about weeks, if not months. It's going to take to basically grind all the way through here. It's going to take them probably a couple weeks to get this production facility back online, and that's going to obviously have a little bit of an impact, I would say, for the next couple weeks, if not a month, unless the OPEC group gets together and says, you know what, we're going to fill in for Saudi production downtime, and that'll basically help appease the market, and then thus bringing the price of crude back down within reasonable and affordable levels once again. So again, as most of you know, we are in a slowing global economy. We have been for some time, but they're finally starting to admit it. The data has been showing it as well. So, the higher you have your oil price, the more of an impact it is for global trade. The cost of goods sold obviously increases with a higher price of oil, because obviously the margins get a little bit skewed to the upside with a higher price of oil. So again, if you want cheap goods, you want people to spend money, or consumers to spend money, obviously need cheaper fuel prices so people travel, et cetera, et cetera. So again, not to beat a dead horse, looking at a open around that 64 level, probably going to peak around close to 66 before we see a nice short opportunity coming back into play here. And just a friendly reminder to everybody, as I always say, make sure that it doesn't matter if you're going long, going short, doesn't matter what you're doing, as long as you're trading and you're using a stop loss and managing your trades and your risks, then you always have, assuming you have a good strategy in place, of course, you have control and you can measure the distance of your, what you're willing to risk, what you're willing to gain, etc., etc. So please use your stop losses. I don't like seeing people blow their accounts up, and I do feel sorry for any of those that did hold short over the weekend. That is just, a reason that is a perfect example of a reason why I do not do that. Okay, so again, that's just my little tidbit with that. As far as crude is concerned, I'll go ahead and just save that, and we'll go ahead and finish this off here. Natural gas, another beautiful mover this past week, and I still think she has a little bit more to the upside here. I know she's been going pretty strong over the past few sessions or so. Still thinking that we can go ahead and push up into, I'll show you why. I take my reverse fib here, looking at the previous highs near $5 and taking it to the weekly low here. A little bit more fuel for this ship, up into around 2.725 to a max high of around 2.77, and then from there looking at a reversal and back into those 220s, I would believe, at that time. So it's going to take a little bit to get there. Right now, I do think that, again, we could probably see her chop around just a little bit. Again, it's still fairly bullish, even if she pulls back in around 240, I would say. The weekly candle, wouldn't be, or the weekly pattern wouldn't be disrupted. It would just take a little bit more time at that point for the price to go up into those 270. So again, I do think that there is still a little bit more fuel in this rally to around the 2.71 to 2.75 level, maybe at a max extension at 2.77, maybe, but I'd give more credence to 2.72, 2.73, and then beyond that, it's, where does she really stop? So as far as levels of measurement, 2.72, 2.73 are the levels that I'd expect here. And obviously, you could see a little bit of a pullback here at around 2.59s. Consolidation here would lead to near-term upside continuation before the reversal back into the 2.35 to 2.25 levels. So again, just a friendly reminder to everybody, please use your stop losses. If you have any questions, comments, concerns, you can always email me directly at tradersperspective@gmail.com, or you can leave a comment at the bottom of the video and I will respond as quickly as I can. So again, good luck and green trades to everybody. Make sure you protect yourselves so that way you can manage your trades, and also make sure that you continue to build upon gains if, assuming that you have a good strategy in place. So again, not to babble and continue on with this, everybody have a green trading week. If any questions, go ahead, leave them at the bottom of the video. Make sure you subscribe. I do these videos every week.